Hello, welcome to another talk on money, business, and investing. My name is Jose. I'm the founder of the company and brand here at Master Investor. Ensure to subscribe to our channel. Check out the links in the description so that we can all have access to the tools and resources that we all need to build true wealth. Today, we're going to dive into an extraordinary article that we put together. Title is How to Use Good Debt for Stock Trading. As we know, in today's economy, money is created with debt. And that means that debt is tax-free, all type of debt. The more debt we use, the less we pay in taxes because the law says all debt is tax-free because money is created with debt. And this happened after 1971, specifically August 15 of 1971. That's when President Nixon decided to separate the gold standard from the US dollar. From that point forward, money became monopoly money, fiat money, and just an idea backed up by confidence. It is literally paper money. There's nothing backing it. It's not real money anymore. That's why we say it's fake money, because it's created with debt. Yes, out of thin air. And that's why this country, the United States, has over $31 trillion in national debt, and it's not going to stop. So the people that are complaining about inflation, I like to tell them that all we need is financial education in order to battle inflation and hyperinflation. When the economy is based on debt, on printing money to move the economy forward, what happens is that the more money we print, the higher inflation goes, because the less and less the dollar is worth. It goes back to its natural and intrinsic value, which it was zero. Every currency in history, if we look back at history, all the currency have always gone back to the intrinsic value, which is zero. So the point is that we need to invest using debt. We need to be comfortable utilizing debt. Stop listening to people that are saying be debt free in order to build wealth. You cannot be truly wealthy or call ourselves an inside investor, master investor, if we don't know how to manage debt. We have to be in debt and use that money to invest in different asset classes. And we can acquire bad debt, because bad debt goes with liabilities. Good debt goes with assets. It doesn't mean that we're not going to have luxury things. Yes, we are. We're going to first focus on building an asset with good debt, and then we're going to use the capital that asset is producing to pay back the debt service, and also to pay any bad liability that we want. It could be a car that we want to have, it could be a house, or any expensive dream that we may have just for the fun of it, right? And so it's all about creating freedom and having the ability to be able to do whatever we want, whenever we want. A lot of people don't have control over the time. Even when they get older, they're still being controlled by other people's opinions, their schedule, and everybody else is living their life, and the employees are there working day and night, forgetting about the dreams. We need to refocus and figure out where we are today. There was a case study that was done, and it said that about 85% of the population hate where they work. They hate their employers, they hate their environment, but they show up to work so that they don't get fired, because they need to pay the bills at the end of the day. They have too many liabilities in the liability column. So what we have to do is first learn how to read our financial statement. That's the step number one. That's why we created How to Build Cash Flow with the Internet Term Passive Income On. If you go to our website, you'll be able to find our digital courses and products. We have ebooks on Amazon as well. But let me show you here one of these courses that we have. It's called How to Build Cash Flow with the Internet Term Passive Income On. This ebook comes with 49 chapters, 580 pages of pure high quality financial education, going to help us understand how to build sales funnels, how to launch our idea, how to find a solution that we want to bring into the marketplace, how to fill that need, how to put it with systems to do the selling and telling for us. We don't want to be working in our business. We want to be working on our business. It's a big difference. We don't want to become an employee of our business. We don't want to even become the CEO of our business, because the CEO is an employee. We are the chairman of our businesses. That's a very different role. And we need to learn how to detach ourselves from the investment vehicles, because that's what they are, the investment vehicles, to take us from point A financially, where we are today, to point B financially, where we want to be tomorrow. And how fast can we do that? It's supposed to be fast. It's not supposed to take a long time. If we're doing real investing, active investing, if we're not giving our money away to anybody to invest it for us, if we're actively investing, then we should be able to see profits coming back very quickly. As long as we're applying the fundamentals and the principles that work in all economies that we're learning here in our community of Master Investors. That's why it's important to sign up for all the digital courses that we have, learn about the education that we are offering here in our community. Is the type of education that is nowhere to be found in the school systems, because the school systems, for lack of a better word, it was hijacked back in 1902, 1903, when John D. Rockefeller, one of the wealthiest families in the world, took over the Cold War, and they decided that they were going to instill a mission, because every company that is successful, any organization that wants to grow, it has to have a clear mission. That's why the 8 integrities inside of the business triangle, on the cash flow triangle that we show inside of our digital course, it describes the 8 integrities that a business must have in order for that business to grow and become a brand and become something that everybody wants to become part of. And it can be here even when we're not here. And that's a true brand right there. Something that can grow even when we're not here. And that's what we want to build at the end of the day. We want to learn how to build brands, not just companies, because companies are commodities. They just come and go. Other people come. If that person is not protected, the company is not established with the legalities, then anybody can take whatever they're doing and make it theirs. So we need to do the boring things, as we call it here, right? The legalities, and we need to invest in our team. And sometimes I see people starting out and they want to save money here and save money here. It's not about saving money. Savers are losers in the new economy, because it keeps us small. If we're in the saving mentality, we're saying there's a scarcity. Yes, we need to be wise when we spend money, but we need to get used to spending more money and allocating money all the time. As we get money, we invest. Even before we get the money, we have a plan for that money to go work hard for us, to multiply, to bring the money back, and to continue to print money for us and help us reach infinite return on investment. Because at the end of the day, that's what we are striving for. Every true master investor wants to have infinite return on investment. That's when we recoup the capital back that we invested of our personal capital, right? We could do a deal that is 100% finance. We're not using any of our capital. All we did was put the deal together and we raise the capital. And it happens all the time. Once we have the skills to raise capital, to put a deal together, money will find us and we will find the money. Okay, because money is always looking for places to grow. And there are people out there that have tons of money in their disposal, but they don't have the time to look for great deals. And that's when we come in. That's why I always repeat to our community that it's important that we learn how to build a business from scratch. Think of an idea that you're passionate about, that you want to solve in the marketplace. Put a team together, put a prototype, and get it out there in the market. It doesn't have to be perfect, but just the lessons that we learn along the way by building a business, they are extraordinary and priceless. No one can take that away from us. And one thing we know about this economy, knowledge is money. And it does not take money to make money, because there are a lot of people with a lot of money in their bank accounts. They save their check, they go to work, they save their check, they go to work. A monkey can do that. We can teach a monkey how to save money literally in the bank. It doesn't take any financial IQ to really save money. And so that is actually level 2 of an investor. We talk about the 5 different levels of investors that exist, right? We have the novice, we have the saver, and we have the amateur, and then we have the professional and capitalist. Those are the 5 levels of investor. We want to strive to be a capitalist, which is a master investor. Capitalist is all about free enterprise, and it's all about finding a need in the world and solving it with a system of systems that will do the selling and telling for us to help us get to that American dream that we all strive for here in America, and not only in United States, but around the world, because the internet has allowed us to all tap into the American dream. We can all sell worldwide. It's like a big country without borders. What a beautiful thing to have this technology today, to be able to communicate with the world through devices and be able to sell something at the same time is good news for everybody, literally, because we can become wealthy quick. It's not like it used to be. Back in the day, it was harder because guess who had the information or who had access to the information? Only the kings, the queens, only the elite, the royals. But now we all have access to the information. This has never happened in history. I mean, we're talking about from homeless to the top people. We all have the same access to the information. I have seen people on the street connecting to free Wi-Fi, using a smart device, and they have access to the information. They don't even have a phone service. So even the Wi-Fi, the internet is free. We live in the best time. So if we're not succeeding, it's because we have a lack of knowledge, we have a lack of financial education, and we have a lack of plan, because investing is having a plan. We talk about it all the time in our community. Investing is having a plan. A lot of people talk about investing, but there are no investing because there's no plan behind it. They don't even know the exit strategy before they get into the investment that they're involved in. So we need to know exactly how we're going to get out of that investment, how fast can we recoup our money back, and how much am I going to continue to keep recouping after I recoup my money back. And that's infinite return investment. That's when we're printing money for nothing, literally. We have recouped our capital back. We have no money into the deal, but yeah, we still control the deal and its cash flow. And that's what we want. We want control. It's not really about ownership, because even if we're doing 100% finance and we're using other people's money, OPM, and we're using the bank's money, we don't care about owning. We care about controlling the property or controlling the investment. It could be a different asset class, and controlling its cash flow. Okay, so control is more important than ownership. Forget about ownership. The poor people want to own everything. The ultra wealthy, we want to control. Sign up for this digital course, How to Build Cash Flow with the Internet. Right now, the price that you see is not going to stay there long, because we are adding more assets into each digital course. As this grows, the price of course will grow. However, whoever gets in today will lock in that price for life. So whatever price we'll see in 10 years from now, 5 years from now, because we are adding exclusive interviews, we are adding things to emphasize more on the topic of this digital course. With wealthy entrepreneurs, we're going to have celebrities, right? We're going to withdraw their wisdom and we're going to package it into our digital course right here, so we can all have access. So whoever gets in now will be locked in to have access to any other digital asset that we add into the digital course here in this course curriculum that we're seeing in front of us. So we have the ebook, we have a short video that we start with. We also have a personal financial statement as an asset that we download into Excel. A lot of people, believe it or not, they don't even know what a financial statement looks like, and let alone they have never seen their own personal finances on paper. So we need to put that on paper immediately. So by getting this course, you'll have a total guide on how to start a multi-million-dollar brand, not just a business. And it's going to give you resources, literally hold us by the hand, step by step. It's a total guide from A to Z, even to find out the niche, where to go, how to find the product, how to build the capture page, how to acquire the system. Everything is detailed inside of our ebook, How to Build Cash Flow with the Internet. And then we have a mutual agreement for finder's fees, because a lot of people leave money on the table. They connect people, but yet they don't ask for their commission. Ethically, we need to ask for our part, because if we made two people come together and they created magic, there was a transaction that happened. That transaction would never have happened if we didn't introduce them. So the mutual agreement allows us to agree on a percentage for every person that we send to that business from our network. Okay, so we can use that when we don't have the ability to sign up for an affiliate program, right? There are a lot of affiliate partnerships right now. Majority of all companies have partnerships where we can sell the products and we can earn a commission every time somebody purchases because of our efforts that we're bringing in. And sometimes those products are subscriptions, so they become residual income, becomes passive income or cash flow, right? If the customer is paying the entire year, we receive that percentage every year from that customer because we brought that customer into that company. All of our courses and ebooks on Master Investor will also carry an affiliate opportunity for all of our members in case we want to share our course with somebody or your friends or family. If you like the course and it's changing your life like many others, then you want to share it with other people, and we want to give you a compensation for that. And a lot of our products will be subscription-based products, so we will create passive income together. It's all about being transparent and doing the stuff that we're saying we're doing. So it's all about creating win-win relationships. And rule number one in our community is that we work to build passive income and make money work hard through sound investing. Now, you can take a look at our other digital courses. We have what are the 10 new rules of money. We also have how to invest in crypto. We can also do a live consultation and many more things on our website. Make sure you also subscribe to our newsletter. And now let's talk about today's article, how to use good debt for stock trading. Debt is frequently compared to a loaded pistol. Administrating it without proper training can lead to disastrous consequences. It can be a really useful tool if we use it properly with our education. Summary. We will gain knowledge about margin trading, including its definition, operation, and significance of prudent money leverage as it relates to bank loans used by real estate investors. This information will assist us in determining whether opening a margin account fits into our overall investment plan. The article discusses the benefits and possible drawbacks of trading using borrowed funds or debt, good debt. We will find that margin can increase both our gains and losses, highlighting the importance of prudent risk management and financial literacy. We can learn effective tactics by studying how well-known investors like Warren Buffett use other people's money, OPM, to increase investment returns. Another benefit is that when we use other people's money, we pay zero in taxes because, as I said earlier on our talk, all debt is tax-free according to the law because money is created with debt. These illustrations highlight how crucial discipline, financial education, and wise investing methods are to minimizing financial catastrophes. Today, we're diving deep into what exactly margin is in day trading, is risk, and whether we should trade with the margin account. While banks typically won't lend us money to trade stocks, that doesn't mean we are out of options for borrowing to invest in the stock market. And one of the reasons why the banks are reluctant about lending in certain asset classes is because they can't tell whether that is going to be a success. They can't really read the financial statements, so there's non-financial statements. A lot of times the banks want to see a history of that business. If it's a real estate property, a commercial real estate property, it has tax returns. It has profit and loss statements. It has the entire financial statements that the bank can analyze, and we can show them the cash flow analysis that will cover the monthly payment or mortgage that we have to pay the bank if they decide to lend us some money for that deal. They need to be able to secure their payment even before they lend us the money. And that's something that we should also do in our investing strategy. Investing is having a plan, and we should never go into something without securing that we will get our money back, and we know exactly when we will get our money back and how much we will continue to collect after we get our money back. So we need to have a plan, and we need to have an exit strategy, just like the banks do. So the banks are more lenient to lend to real estate properties because they have a history, and if something goes south, then they can take the property, and they would then the property stays there, and they do it again. They find another entrepreneur that can run it better if the first one didn't run it better, or fail on the payments. But there's collateral, and they're betting not on us, they're betting on the properties. That's why I always also recommend the bigger the better, because it's the same energy that we're putting into a small deal than into a big deal. However, the banks like to see bigger deals because they stop paying attention to us. They now start paying attention to the actual deal. That's where the money's going to go. With enough experience and knowledge, we might find friends and families willing to lend us money to enhance their financial standing and ours. If we are like many people who would rather not handle grandma's retirement funds, there are other ways. Like in real estate, the stock market offers plenty of opportunities to use other people's money, OPM. As an investor, we can utilize a margin account in the stock market. Buying a stock on margin let us leverage our capital much like a real estate investor uses a bank loan. Embracing master investors mindset means using debt wisely after we are financially educated. Not before. Leveraging money with good debt is a practice to respect, not fear, unlike the kind of debt that chains people to a job. There is nothing wrong with having liabilities, things that only takes money out of our lives in our lives, as long as we have good debt, assets that will pay for the liabilities expenses. And that's what I mentioned earlier. If we want to have something that is fun or luxury, it's just for us, we first focus on building and acquiring an asset that will go ahead and pay for that liability, for that fun. And we can do it all the time. We don't have to do it one time. Now we have an asset that can make us experience whatever that thing that we want to have over and over again. It could be a vacation. It could be flying to a certain destination, right? And so we can do that every weekend because now we have an asset that is specifically built to go ahead and pay for that liability. Leveraging money with good debt is a practice to respect. Like I said, no fear, unlike the kind of debt that chains people to a job. That's bad debt, right? So if majority of people, all they do is accumulate bad debt, all they're going to find themselves is running in the rat race trying to keep up with the payments of that bad debt that they acquire. There is nothing wrong with having liabilities. It's all about understanding how to acquire assets first and utilizing that, using everything that we have in front of us to first get us in a position of financial freedom and having cash flow coming in from our assets that we control with our companies. That's the key. And using debt, being smart, being creative. People that use their own capital to invest, they're lazy, they lack financial education. We can use our own capital, but we have to also leverage our capital to acquire other people's capital. So if we have 100,000 cash, instead of killing the 100,000 right from the bat, we first go into a bank and we ask for a credit line of 100,000. And now we have 200,000. So we can raise capital with our capital. The job number one of a wealthy entrepreneur is to raise capital. And the number one skill is to learn how to sell without selling using systems and smart marketing. Exactly what we're learning how to do inside of our community here at Master Investor. And the job number one of an inside investor is to multiply money through sound investing. And it requires financial education. We have to literally commit to a lifelong study of financial education. We cannot go around it, okay? And the people that lack financial education, those are the same people that end up losing money, end up hating investing, end up talking bad about business. They don't want to even talk about money to other people. And they live in this bubble, right? And they live in the bubble that having a better job, maybe a better check coming in every 2 weeks is going to solve their financial problems. And that doesn't solve the problems. What really solves our financial problems is financial education. and applying that information into our lives and learning how to make money our slave, not the other way around. A lot of people are slave to money. That's the new slavery, right? A paycheck. That's how people are slave. People hate, a lot of them hate what they do. Now, there are people that love what they do, and we want those type of people in those places. We need great employees. And to those people, we also need to, everybody needs to learn how to invest, because at some point, maybe we don't want to do that. And so we need to switch into our investor hat, and we need to learn how to invest our money that we earn in from X, Y, and Z company. We need to put that to work. So if you're making money by working at a job that you like, learn how to invest that into yourself first and financial education, and then begin to invest your money, not giving it into a 401k. We call those fake assets. We're not talking about mutual funds. We're talking about actively investing, creating a plan to put that money to work with a company that we control. It's not about giving our money away, putting money away for somebody else to do it for us. Okay? And it's about receiving passive income now, not in 10, 20 years, 40 years from now. 401k are fake assets, because if they're not putting money in our pocket, we cannot call them an asset. Remember, an asset puts money in our pocket whenever we're not working right now. A liability takes money out of our pocket. An asset goes hand to hand with good debt. A liability goes hand to hand with bad debt. It's quite simple, but majority of people overlook the simple concepts, ironically enough. And it's because of the lack of financial education and all the people that came before them that gave them the wrong information. So we need to unlearn what we used to know and then learn the new, because everything is changing so quickly. As an investor, we can utilize a margin account, right? And so we're going to do that. We can leverage our money by purchasing stocks on margin in a similar way to how a real estate investor uses a bank loan. Adopting master investor's mindset entails managing good and bad debt sensibly, following our financial education, no prior to it. Unlike debt that ties us to a work, leverage money with good debt is a habit that we appreciate rather than dread. What precisely is a margin account then? We can buy more stocks with this method of borrowing money from our broker than we could if we were buying them all with our own money. This has the potential to greatly enhance both our gains and losses. Never forget that using debt for leverage calls for respect and cautious consideration. We must have a margin account with our broker in order to trade on margin, and we will need to supply collateral, which is typically stocks that we already own. When making a long-term investment, make sure our earnings will offset the interest cost we incur from brokers. We can borrow up to 50% of the stock purchase amount after account is established. What makes margin necessary? Leverage is the same reason debt is used by real estate investors. It magnifies gains when the equities increases, significantly raising our potential profits, or conversely, amplifying our losses in the event that things go south. Although the riskiest leverage is a very effective tool for wealth accumulation, debt is sometimes compared to a loaded gun. If handled carelessly, it may cause a lot of damage, but if utilized properly and cautiously, it can be a useful tool. Debt can make us very wealthy or can make someone very poor. It all depends of the financial education that we have behind that loan, that debt, that credit. So if we have a credit card, use that credit card of $10,000, $20,000, $50,000 to invest into something that will create money fast right now, something that is solving a problem. We're going to invest it into a real business. We're going to create it if we have to from scratch. We're going to put the business together. We're going to incorporate. We're going to create our website. We're going to put the product. We're going to put the systems. We're going to start collecting emails every day of potential leads that are interested in our products. And we're going to nurture them by building rapport, providing value. under promising and over delivering so that they like us, know us, and trust us, and now they will do business with us. It's all about collecting our own database of potential leads that are interested in what we're doing because of our value. And we all have value in us. Okay, never feel like we don't have any value because we have lift. We simply have lift and we always have something to offer. But it's also important that we continue to invest in ourselves, okay? Every single day. Reading is key. Okay, listening to podcasts like this is key as well. We're learning something new every day. Using a margin account to invest in Tesla in 2024. Let's now assume that we have had a little cash account with 5,000, for an example. Normally, we could only afford 19 shares of Tesla at the current price. Last time we checked, it was around 262.83 cents, July 2024. If we sell things for more, we will make a lot more money. However, we could leverage up to 20,000 with margin using just our initial 5,000. We may purchase twice as many Tesla shares, and if they increase by even a small amount, our return will increase significantly. The main benefit of trading on a margin account is that when leveraged appropriately, margin accounts allow us to increase both our potential gains and losses, which we'll discuss in a moment. The trade settlement durations provide an additional benefit. A margin account enabled us to reuse funds instantly, which is essential if we want to day trade full-time, as opposed to a cash account where we will have to wait 2 days to reinvest. The skill of leveraging other people's money, or as we call it, OPM, to increase investment returns has been perfected by a number of well-known investors. Here are some of the noteworthy instances. Ray Dalio, Bridgewater Associates, one of the biggest and most prosperous hedge funds in the world, was founded by Ray Dalio. An estimated $15 billion in his net worth. In order to increase returns while controlling risk, Dalio Pure Alpha strategy leverages positions across a variety of asset classes using OPM, other people's money. Tax-free wealth, right? Because as we said early on our talk, money is created with debt, and that's why all debt is tax-free. And that's why we want to be involved in as much debt as possible. Of course, good debt. And we're going to have bad debt. The more good debt we have and the wealthier we become, I'm pretty sure we will have bad debt because we would like to have this, we would like to have that, and it's just for fun. We like to have this Lamborghini, we like to get this private jet, maybe we like to have this yacht or whatever. The toy that we want to have in our life, we're going to be able to get it because we have assets that are pumping in positive cash flow into our pockets, or also known as passive income. Two types of income that exist from investing. We have passive income or positive cash flow, and that's what we want to focus on because that gives us true freedom and true wealth. And capital gains income, which comes in as a one-time payment from something that we purchased at a certain price and we sold it at a higher price. Those profits right there, that's capital gains income, and usually they are taxed at a higher bracket than passive income, unless we apply certain strategies that is allowed by law, such as a 1031 exchange when it comes to real estate. That's when we have a certain amount of period after we sell an asset that we have, a real estate property, to reinvest those gains into a bigger asset so that we defer taxes and we don't have to pay taxes on those capital gains, which can be very hefty in many instances. The next investor that we have Carl Icahn, with an estimated net worth of over 15 million. Carl Icahn is a prominent activist investor. By using OPM to buy sizable shares in businesses, he may influence changes that he thinks will increase stock value and unleash shareholder value. Bill Ackman, Persian Square Capital Management, a hedge fund renowned for its activist investment techniques, was founded by Bill Ackman. It is believed that Ackman has a net worth of approximately $3 billion. He argues for reforms to unlock value after using OPM to take sizable leverage investments in undervalued or poorly run businesses. These investors have demonstrated the potential power and risk of using borrowed funds and investments by utilizing OPM and a variety of methods to increase their returns. Even with all of these advantages, day trading on a margin account is not for the timid or the financial uneducated. To make our own decision, it is critical to comprehend the true nature of margin trading and its benefits and drawbacks. Above all, stay away until we have taken risk management seriously. Compared to cash accounts, margin accounts are riskier, and poor management could put our initial investment at risk, as well as a result in us owning our broker money. In other words, good debt can turn into bad debt. An asset can turn into a liability if it's poorly managed. That's why we need to stay focused. We need to have the right team in place. We need to pay attention. Okay, we cannot lose focus. We're the chairman of our companies, but we need to stay focused, and we need to have that communication internally and externally with our companies and brands that we're building. We need to have the right systems. But in any occasion, if we want to grow a company, we have to grow ourselves. We have to grow the leader in the company. It is prudent to trade stocks with a margin account in 2024. Professional traders find that margin accounts, when handled properly, are quite helpful in maximizing earning on both the long and short sides. However, if we utilize it improperly, a margin call might cause us to lose all of our money. In summary, our trading success or failure will not be influenced by the sort of account we have, be it cash or margin. Many misconceptions exist regarding margin. Some claim that it's bad since it involves gambling, or that it will cost us to blow up our account, which means we lose everything. However, let us reassure us that margin alone does not cause traders to fail or blow up. Rather, it is the trader or the investor on lack of discipline, lack of risk management, or reliance on dubious recommendations that cause them harm. Both margin and cash accounts can be really blown up by an inexperienced trader or investor who lacks financial knowledge and prudence. Blows up aren't confined to margin trading, because an uninformed trader may follow unreliable suggestions, pursue market trends, or make rash decisions if they lack a firm grasp of market dynamics and risk management. Whether they use their own money in a cash account or borrow money in a margin account, this careless behavior can result in a large financial losses. Consider it this way. It is like playing with fire to use a margin account without knowing the hazards. We could get burned. Margin calls, which require more money to offset losses, might appear out of nowhere. The broker may liquidate our holdings at a loss, wiping out our equity and placing us in debt if we are unable to meet this demand. In cash account, the same bad choices might gradually deplete our capital and eventually result in significant losses. Whether trading with margin or cash, education, self-control, and prudent risk management are essential for success. Leverage is powerful tool. It's a powerful tool, but without the right knowledge and respect, it can become a dangerous weapon. Gain the financial knowledge required to properly navigate the markets before delving into the intricacies of stock trading. Keep in mind that what matters is how much money we keep and how we make that money, not how much money we make. We must strictly focus on the assets column instead of the income of our financial statements. Acquire sound assets over and over again that will put money into our income column. A lot of people, all they focus on is their jobs, and then they put that money into the income column. They have no assets. And if they have anything, they have fake assets, which are liabilities. They may have 401k, mutual funds. They're not putting any money into their pocket right now. All they're doing is putting money into those fake vehicles. Not until something puts money into our pocket, we cannot call it an asset. And if it doesn't recoup our money back and it doesn't continue to print money for us, then it's not an asset. An asset puts money into our pocket over and over again because the system of systems doing the selling and telling for us is solving a problem, and we have that under our control with our company, and we're collecting the cash flow from that. That's a true asset. Keep in mind that what matters is how much money we get to keep at the end of the day, how much of that money we get to keep working in different assets. And we want to be tax-free legally. We want to pay the least amount in taxes because this country is built in the idea of not paying taxes legally. I don't know why and where, and I think the schools did this. They made it seem like paying taxes is patriotic. It's not patriotic. Paying taxes is actually the very opposite. Being really patriotic of the United States and the capitalist system is paying no taxes legally. We don't have to hide money to do this. We show all the money. We have everything in paper. We're following the law. We have the right CPA, the right attorney, and we're utilizing the tax code because it is a package of incentives for wealthy entrepreneurs and inside investors. The rules were created by the wealthy to benefit the wealthy, not the employee, but the shareman. Okay, so let's think about things that we want to bring to the world, what type of problems we want to solve, and begin to educate ourselves financially so that we can invest using strategies like we can with the margin account. For example, we can leverage other people's money. Instead of using only our money, we're using other people's money as well, which is very important. Additionally, we must be astute, knowledgeable, and strategic if we want to maintain our money multiplying through sound investing and wealth protection. The team of professionals in our lives is a critical point. We must have the right mentors and team in order to succeed in business. We can start small to gain confidence and grow from there, but we must take action. Here at Master Investor, we can help us take the next step. Are we prepared to use other people's money, OPM, and other people's time, OPT, to our advantage and begin trading stocks and invest in different asset classes, not just stocks? We're going to focus on different asset classes, right? There are 5 different asset classes that we learn inside of our community that exists that anyone can invest in with financial education. So we have number 1, business. Number 2, real estate. Number 3, crypto. Number 4, paper assets. Number 5, commodities. And they all require financial education. We have the finest education to teach all of our partners. Don't let the intricacies of stock trading prevent us from succeeding. Give ourselves the information and abilities we need to confidently traverse the market and create true wealth. Start investing in high quality financial education here at Master Investor. Get our ebook, The 10-Year Rules of Money, how to build cash flow with the internet, turn passive income on, how to invest in crypto to build wealth. Stay tuned because we are releasing our 4th ebook, How to Raise Capital to Build Wealth. Make sure you follow us on all social media platforms and leave a comment if you have any feedback. We highly appreciate anyone giving us some sort of information about today's talk, what we learned. If it inspires you, let me know exactly in the comment section your thoughts, and make sure that we invest in ourselves. Okay, that's the first step we want to do. Go ahead and get our ebooks. get our digital courses. If you want to start and you don't know where to start, get how to build cash flow with the internet, turn passive income on. That digital course will help anyone understand how to build financial freedom and true wealth. Okay, how to turn our ideas into and our passions into real businesses that turn into brands. Okay, because we want to put the legalities well established in each business that we build so that no one can take that away from us. That means that we're going to trademark our logo, we're going to protect our products, intellectual property, patents, etc. The legalities must be in order from the beginning. All right. I hope that we learned a lot today. I will be here tomorrow with another valuable talk on money, business, and investing. Stay extraordinary and wealthy, bring you the good and bad news of money, the business principles at work in all economies.